Ever wondered how the savvy investors you hear about are making a killing from the stock market? The secret might be in option trading. Welcome, fellow seekers of financial wisdom, to the intriguing world of options trading. Unlike traditional stock trading, where you buy or sell shares outright, option trading is all about dealing in possibilities. You're essentially buying or selling the right, but not the obligation, to purchase or sell a stock at a predetermined price within a certain time frame. This gives you the flexibility to speculate on the future movement of stock prices with a comparatively lower investment. This unique dynamic of options trading opens doors to potentially high returns. It's like playing chess with the stock market, where strategic moves can yield significant gains. But remember, with great rewards come great risks, a principle that holds true in options trading as well. So, if you've been curious about option trading, you're in the right place. Let's unravel this financial mystery. To start, you need to understand what an option is. An option is a contract that grants you the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specific time frame. It's like a reservation at your favorite restaurant. You have the right to a table, but you're not obligated to show up. Now there are two types of options, calls and puts. A call option gives you the right to buy the underlying asset, while a put option gives you the right to sell it. Think of it like this. Call options are like holding a coupon that allows you to buy something at a discounted price. And put options are like having an insurance policy that allows you to sell something at a guaranteed price. Let's dive a bit deeper. The underlying asset in an options contract can be a variety of financial instruments, like stocks, bonds, commodities, or currencies. It's the thing you're betting on. If you're thinking about buying a call option, you're betting that the price of the underlying asset will go up. On the flip side, if you're considering a put option, you're betting that the price will go down. Remember, the beauty of options is in their flexibility. You can use them to hedge against potential losses, to speculate on market movements, or to generate income. However, they also come with risks, and understanding these risks is crucial. To sum up, an option is a contract that gives you the right to buy, call, or sell, put, an underlying asset at a predetermined price within a specific time frame. The underlying asset can be various financial instruments, and your predictions about its price movements will determine whether you opt for a call or a put option. Grasping these basic concepts is the first step in your journey to becoming an option trader. Now that you know what an option is, let's delve into how options trading works. At its core, options trading is the buying and selling of options. But what are you actually buying or selling? Well, when you buy an option, you're buying the right, but not the obligation, to buy or sell a specific asset at a set price within a certain period of time. This right to buy or sell is known as an option contract. It's a legally binding agreement between two parties, the option buyer and the option seller. The buyer pays what's called a premium to the seller, and in exchange, the seller takes on an obligation. If the buyer chooses to exercise the option, the seller must fulfill their end of the deal. But where do these transactions take place? They occur in the options market, a marketplace where traders buy and sell options. This market operates much like any other financial market. Prices fluctuate based on supply and demand, and market participants include everyone from individual investors to institutional traders. Now, it's important to note that most options traders don't actually exercise their options. Instead, they sell their options contracts back to the market before they expire. Why? Well, it allows them to lock in profits or cut losses without having to buy or sell the underlying asset. Options trading can be complex, but it also offers a world of opportunities. With options, you can speculate on the direction of stock prices, hedge against potential losses, generate income, and much more. And here's the best part, you don't need a fortune to get started. Many options contracts are relatively affordable, making options trading accessible to a wide range of investors. So, there you have it, the basics of how options trading works. You're buying or selling the right to buy or sell an asset, all within the options market. With this understanding, you're ready to explore the strategies that can help you make money from options trading. Options trading isn't a game of chance, it requires a solid strategy. Let's delve into some common options trading strategies, each with its unique approach and risk-reward dynamics. Firstly, we have buying calls, a bullish strategy that investors use when they expect the price of an underlying security to rise. In this scenario, you are purchasing the right to buy the asset at a fixed price, known as the strike price, within a certain time frame. If the asset price increases beyond the strike price, you can buy the asset at a discount and sell it at the current market price, reaping a profit. Next, we have the buying puts strategy, which is essentially the opposite of buying calls. This is a bearish strategy used when you expect the price of an underlying asset to fall. Here, you're purchasing the right to sell the asset at a fixed price within a certain period. If the asset price falls below the strike price, you can buy the asset at the current market price and sell it at the higher strike price, making a profit. Lastly, let's explore selling covered calls. This strategy is typically used when you already own the underlying asset and anticipate a slight increase or neutral movement in its price. You sell someone the right to buy your asset at a higher price in the future. If the price doesn't reach that level, you keep the asset and the premium you received when selling the call option. Remember, these are just a few of the many strategies in the realm of options trading. Each strategy comes with its own set of risks and rewards, and it's crucial to understand them fully before diving in. Also, keep in mind that strategies should be adjusted based on market conditions and your risk tolerance. By mastering these strategies, you can start to see how options trading can be a profitable venture. So equip yourself with knowledge, build a robust strategy, and set forth on your options trading journey. It's important to remember that with high potential returns come high risks. As we delve into the world of options trading, it's critical to acknowledge that this is not a risk-free endeavor. Quite the contrary, in fact. Options trading, like any investment, carries with it the potential for significant losses. But don't let that discourage you. Rather, let it serve as a reminder of the importance of diligent risk management. One of the most significant risks in options trading is the complete loss of the investment. This happens when the underlying asset's price does not move in the direction you anticipated within the contract's time frame. Here, the option expires worthless. This risk is particularly high for buyers of call options, who stand to lose the entire premium paid if the underlying asset's price fails to rise above the strike price. Another risk is the complexity and volatility of the market. Options prices can be affected by several factors, including changes in the price of the underlying asset, volatility, time decay, and even changes in interest rates. This complexity can make options trading more challenging and unpredictable. However, it's not all doom and gloom. The potential rewards of options trading can be substantial. Options provide leverage, allowing you to potentially make a larger return from a smaller initial investment. They also offer the flexibility to profit in any market condition, whether prices are rising, falling, or remaining stagnant. But the key to reaping these rewards lies in effective risk management. This involves setting a budget for your options trading activities, diversifying your portfolio, and using strategies like stop-loss orders to limit potential losses. It's also essential to continually educate yourself about the market and to stay updated on any changes that could affect your investments. In conclusion, options trading is a high-risk, high-reward investment strategy. While the potential for significant losses is real, so too are the opportunities for substantial gains. It's a game of skill, strategy, and calculated risk. By understanding the risks and implementing effective risk management strategies, you can protect your investment and maximize your returns. Option trading might seem complex, but with knowledge and practice, it can be a powerful tool in your investing arsenal. We've journeyed through the basics, covering what options are and how they work. We've also delved into various trading strategies and explored the potential risks and rewards. This knowledge is a solid foundation, but it's only the beginning. To deepen your understanding, consider reading books dedicated to options trading. Titles like Option Volatility and Pricing or The Options Playbook can be helpful. Online courses are another rich resource, offering structured learning paths and often a community of learners. And let's not forget practice. Virtual trading accounts allow you to apply your newfound knowledge in a risk-free environment. It's like a flight simulator for traders, offering invaluable hands-on experience. Remember, the journey of 1,000 miles begins with a single step. Start your option trading journey today